Hello and welcome to Barrier Options, Intro to Barrier Options and Bounded Options, a video by Make300aday.com, copyright 2012, Make300aday.com. So just a few quick words here on barrier options. First of all, they pay out yields similar to binary options, which are typically in the range of 65 to 75%. On the short-term contracts, typically hourly or daily expiration, depending on the contract you choose and the security or asset you choose to trade. They have a range of in-the-money strike prices rather than a single target value, which would be typical of binary options. They can be bought as the inside range of values or the outside range of values. For example, if you were trading Google and buying a binary option contract on Google, you might have a strike price of $575 with a call option bought on it. In that case, you would expect that if the price of Google went to $580, that your call binary option would be in the money. That's not necessarily the case in a barrier option. A barrier option works differently. You might buy a barrier option with a range of values from $570 to $580 per share. If you bought the inside barrier option and the closing price at expiration of Google stock was $579, then your range barrier option would land in the money if you had bought the inside option on that range. If you had bought the outside option on that range, you would be out of the money because the strike price, the expiration price, fell inside the range rather than outside. And perhaps a diagram might help in explaining how these inside and outside ranges work with regards to strike prices. And we'll come to that in a minute. The next thing to think about is that, as we mentioned before, they expire hourly or daily, depending on the contract you buy. And you typically can only find them at selected binary options brokers. Typically you would find, if somebody offers barrier options, you'd probably also find touch, no touch options as well, possibly weekly options. It all depends on the platform and the broker that you select. Okay, so here's an example of what I'm trying to talk to you about with regards to barrier options price ranges, strike price ranges. In the chart you see the yellow line represents the share price, the actual underlying share price over time, time 1, time 2, time 3, and then actual expiration. And the blue line represents the upper range of a typical barrier option, and the red line represents the lower range you might see on a barrier option. Now when you go to buy a barrier option from your broker, typically you would buy either the inside range, either in this case between $6.50 and $8, or you would buy the outside range, giving you $6.50 and below and $8 and above. For example, if you bought the inside range between the red line and the blue line, and you followed the chart and at expiration the price fell outside the red line and the blue line, as it does in our example, the share price actually closes at $8.20 just above the blue line, you would fall, your contract for the inside range would be out of the money. On the other hand, if you had thought that the price of the shares was going to be more volatile and you thought it was going to fall outside the narrow range of the barrier option, then you would have fallen in the money if you'd bought in the outside range. I know it's kind of confusing to understand, but I hope that by following along with the shadow boxes that you'll see what I mean by inside range and outside range. So if you take a look now, I'm showing you the inside range, and if the stock price at the expiration falls in the inside range barrier options are in the money. Now I'm showing you the outside range with the shadow box, and if at expiration that the share price ends up in this range, in this outside range, and you have bought the outside barrier option, then your contract falls in the money. Does that make sense? So here it is again. Inside range, outside range. And in our example, the contract expires in the outside range. But if you look at time 1, we're in the outside range below. At time 2, we're in the inside range. At time 3, we're towards the low end of the inside range. And at expiration, or time 4, we're in the upper range of the outside range. Does that make sense? I hope so. You can learn more about binary options and barrier options by visiting make300aday.com. There you'll see more detailed examples of both binary and barrier options, including specific worksheets, charts, and other videos and tutorials describing binary options and barrier options and how to make money with them. Thanks again, and this video is copyright 2012, make300aday.com.